Morning, everyone. Thanks for joining us today. So I think we see a few more trickling in. The webinar will be recorded, of course. I think we're just gonna get the slides shared again here shortly. But yeah, thanks for joining us. So my name's Matt. I'm from Fathom. I'm delighted to be joined by Daniel from Bridgement, as well as Peter from Iridium today. So we're going to be going over cash flow and how kind of loans and Bridgement can help secure some kind of cash flow certainty for you and your clients. So I guess just to do some further introductions, my name's Matt, head of operations for Fathom. So we are a business analytics, management reporting and forecasting tool. So you see a little sneak peek of it later on in the presentation today, but contact details at the end. So if you have any kind of burning questions on that, we can pick that up afterwards. Just before I hand over to Dan and Peter to introduce themselves, if you have any questions, please do use the Q&A in the Zoom window. We'll pick them up at the end of the presentation today or afterwards if we run out of time. So yeah, Daniel, over to yourself.
Sure. Thanks, Matt. Hi, everyone. Dan Goldberg. I'm the CEO and co-founder of Bridgement. Bridgement is a fintech credit provider to SMEs, small businesses around South Africa. And we work very closely with the accountants and the accounting software packages like Xero, QuickBooks, and Sage to simplify access to funding for SMEs, helping them leverage their financial data to get quicker and easier, more flexible funding. Good to be here with you today and looking forward to taking you through a really important topic, especially at this time. And yeah, over to you, Peter.
Thanks, Dan. My name's Peter. I'm one of the directors at Iridium alongside my brother, Simon. We've been around for 8 years now as of last month, and we work with around 200 different SMEs throughout South Africa and employ a team of just over 30 cloud accountants and other people. Yeah, we love technology. We love utilizing it to help streamline our clients' business and our own business. And yeah, I'm excited to chat around cash flow and how to utilize these tools.
Cool. Thanks, Peter. So let's jump into it. In terms of today's agenda, Matt, do you want to take us through this, or should I just go right in?
Take us away, Dan. All yours.
Cool. So yeah, in terms of today's agenda, we're going to be covering a number of really important topics relating to bouncing back. Forecasting and funding for survivals is obviously an incredibly important topic in this day and age in a COVID world. And we certainly are not through COVID yet here in South Africa. And so we're going to be talking about some really important topics relating to that. We'll be looking at the current landscape of businesses, SME finance in South Africa, what businesses are going through, what we're seeing in the market. We'll be talking about identifying short-term tax issues and how short-term bridging loans can be used to avoid penalties and get out of sticky situations. We'll be looking at stopping the squeeze and why analyzing payment terms of suppliers is really important. We'll be talking also about why cash is king and liquidity is vital. We'll also go through a very quick snippet of how Fathom and Bridgement help advisors and accountants to seamlessly plan cash flow and access funding fast for themselves as well as their clients, obviously. And we'll be looking at new tech tools and how they can benefit you and your clients. So jumping into it straight away, one of the really important and interesting insights that we saw coming out of the Xero report last year, the Restart 2020 report, was that almost 2/3 of SMEs reported that they had used their own savings to start their businesses instead and to support their businesses instead of taking out a loan or any sort of funding. So that means that business owners stand to take a serious hit to their personal finances if their businesses go under during COVID. So quite an interesting stat. 64% of businesses finding themselves in this situation. So in terms of what we've been seeing in the market from Bridgman side, in terms of the current landscape for businesses, we're seeing SMEs face unprecedented pressures from almost every angle. We're seeing suppliers starting to reduce trade credit and requiring SMEs to pay cash upfront or COD. And there are a whole number of reasons why suppliers are doing that. Obviously, with a lot of uncertainty in the economy and in the market, suppliers are, uncertain over the creditworthiness of their SMEs that are buying from them, and so they're starting to reduce the trade credit that they typically would have offered. Where they would have allowed an SME to pay over 30 or 60 or 90 days. Now they're requiring cash up front. We're also seeing large customers, large corporate clients taking longer to pay, pushing out their payment terms. This is especially bad where your customer is government, but even with corporate clients, we're seeing this to be worse now, more so than ever. We're seeing banks really start reducing overdrafts. We have seen this across a number of our own clients who had very large, sometimes even multi-million rand overdrafts with their bank that they use to trade into and out of every single month. We've seen banks start to really pull back from the market and stop offering, some of their, or reducing some of their credit facilities that they offer SMEs. And we're also seeing landlords, landlords offered a lot of payment holidays, a lot of relief over the course of last year, and those have really come to an end now. And they're much less likely to make any allowances to any of their SME tenants. And government, of course, has had a number of various relief measures, programs, COVID loans. There's obviously the huge 200 billion rand COVID loan guarantee program, and those have largely come to an end. The COVID loan guarantee program comes to an end on the 11th of July in 4 days' time. And so we really are seeing SMEs facing pressures from just about every angle. So one of the really interesting metrics that are, or dashboards that's out there in the market at the moment is this SME turnover index, which essentially tracks where SMEs across the country are relative to their turnover levels from a pre-COVID world, from February, March 2020. And what we're currently seeing is that SMEs are only on average around at the 78% mark of where they were back last year in February or March. So, they're still at revenue levels that are around 22% lower than where they were in a pre-COVID world. This obviously depends on the industry you're in, and it of course depends on which province you're in. There are many factors at play, but on average, SMEs by far and large are still trading well below where they were in a pre-COVID world. One of the interesting things to look at is the performance of the 200 billion rand government loan scheme. Unfortunately, it has not performed really well, and there are a number of factors why. But ultimately, what's happened is government allocated a 200 billion rand guarantee to encourage the banks to deploy funding to small businesses in need of some relief because of COVID. And unfortunately, now 4 days before the deadline, we've been running for a number of months. We've got 4 days to go before the end of this program. The banks have only deployed less than 10% of that total 200 billion rand. So really a disappointing outcome. Only 18 billion rand has been deployed of the 200. And what's also quite concerning is looking at the number of SMEs that actually received this relief funding. So only about 15,000 SMEs across South Africa received this relief funding. And we, of course, all know that there are significantly more SMEs that have been under pressure and that have been in need of some form of relief and could have used this relief very much. So it's quite disappointing that so few businesses were able to obtain this funding. And also what's quite concerning is if you look at what the average transaction size was, we've seen that that's around 1.3 million rand per client, which of course means that larger SMEs tended to get these loans these government COVID loans from the banks, instead of the bulk or the vast majority of SMEs who had much smaller needs of maybe 100 to 300, 400, 500,000 rand. So really quite concerning. I think Peter, we were chatting a few days ago. You mentioned that one of the banks told you that they had stopped already, even though we haven't reached the deadline, the 11th of July deadline. You had heard that one of the banks has stopped already.
Yeah, it was quite funny. I mean, one of my clients applied, I think 2 months ago, and they went through a really long process to try and get funding to kickstart their business again, and purchase stock so that it could actually sell to customers. They had a line of customers wanting to purchase from them, but they just didn't have enough cash to pay their suppliers. And the bank denied them multiple times. We went to kind of person top at the bank to try and get it resolved. Eventually, they got offered a third of what they required, and it wasn't under the COVID scheme because they had said that the COVID scheme had already closed. Which, I mean, I've got a trail of emails telling me that it's closed, and we know full well that it's not. So it blows my mind, but I think, I mean, it's kind of just a short snip of what's happened to many clients, not just on our side, but for many of the accountants out there.
Yeah, really, really concerning. And besides for this data that we've seen in the market, we've also seen on Bridgman's side from the clients that apply with us, the very small portion of clients that did get funding, and I would say probably less than 5% of our client base managed to get these COVID loans. The few that got it were the larger clients, and they got multi-million rand COVID loans. So it's really unfortunate that small businesses were largely overlooked with this program. Over to you guys.
Thanks. I think I'll drive these ones. Essentially, I just wanted to run through three key points from my side. They're probably not revolutionary points, but I think they're important to think around. So let's kick off on the first one: no cash on hand for tax. And I think this is something that's very common these days for a lot of clients. What I wanted to talk around is just an example that's quite a common example that we've had in the last 18 months or so. And Dan, can you just switch to the next slide, and we'll kick it over. So kind of the points I wanted to talk through was, it's important for your clients to know their deadlines, their tax deadlines, because then they can set those in, plan kind of a rough amount of what cash they require. So for us, the PAYE deadline, the VAT deadlines coming up end of August, do they need to kick in some provisional tax? And those for me are the main, PAYE, VAT and tax. And once you know what they are and you've got a rough idea, having an ability to plan what your deficit's going to be from a cash flow perspective, which means you do need to do a little bit of work around what your sales are going to be, what those are going to convert into cash, and when, who you owe money from a supplier perspective, and when do you need to pay them, and kind of all tax deadlines and when you need to pay those, and your common OPEX like your salaries. And so you do need to model that out. And Matt's going to run through just an example of around how to do some modeling using Fathom. And then something that I was talking to my colleague around is you've got short-term cash flow and long-term cash flow, and short-term cash flow is much easier to predict. But it's also important to look at what your long-term challenges are. I know myself and my brother, when we hit the start of the year, we've hired 10 people. Our short-term cash flow looks atrocious because we've just bought 10 new laptops. we've got 10 new salaries that we need to add, and we don't have a whole lot more clients in the bag. But as we project over 6 to 12 months, the red starts going green, and we're able to have a warm, fuzzy feeling that we're going to make it. But if we just looked at the short term, I would probably pack up and close the business, because we wouldn't survive without an overdraft or loans. And so I think it's really important to do that exercise of short and long for yourself and for your clients. Because I think often I've seen our clients look in the short term and go, it's not worth it. I'm in the negative. I'm never going to get out. And they don't see ahead, because that's not how their brains operate. They're not accountants. They're not financially literate necessarily. So painting that picture short and long is important. And so, yeah, just an example. Let's unpack. If you or your clients had a VAT bill due end of the month, and we've done this exercise of balancing all our different cash flows and worked out that we're going to sit with an 80,000 Rand deficit. The option is either wait until next month and pay that and incur the penalty, or take out a bridging loan of 80,000 Rand. And if we look at option one, everyone knows SARS charges a penalty on day one of 8,000 Rand. And then we start incurring interest, and right now it's at 7% per annum. We haven't worked out what the interest is in this example, because I think the 8,000 Rand on day one is a little bit more important to look at. And just with a quick calculation, and thanks to Dan for this, Bridgman said, they would charge us between 370 and 550 per week. So if we had enough money to close this out 1 month afterwards, we'd be in for around about 2,000 Rand in fees. So just by taking our loan, I've saved 6,000 Rand in total, plus a little bit of interest there, and SARS is a lot happier. So I'm still compliant with SARS. I can get a tax certificate. If any of my suppliers need that for anything, I'm good. And I think this is a much better approach to take that bridging loan. I've done this for a number of our clients, and it saved them a hell of a lot of money. And so, yeah, I implore you to look at this. Tell me if there's anything that I've missed. I think it's a fairly cut and dry example of how you can save money for your clients and potentially for yourself. Cool. So let's move on to the next. And I think this is something it's possibly more for your clients, and it's something that I've realized when chatting to a number of my customers. They've got an idea in their head, but they haven't actually put it down on paper. They haven't sat down and said, these are my key suppliers. This is kind of the payment terms in terms of 30 days, 60 days. Do we get a discount if we pay early? And there's an opportunity if you can save some money by taking a bridging loan, paying a supplier early, getting a discount, and that discount might even offset the fees. So doing that little quick check, you might be able to save some money for your customer. And it also is really important when you're doing your cash flow analysis to know when you need to pay your suppliers. Then starting a conversation with your suppliers around, can we push some things out? Can we get an additional discount potentially if we pay early? I think right now a lot of guys will be more than happy to provide additional discounts if you're giving them cash flow, because cash is king right now. And then the other kind of factors I wanted to talk around is not just suppliers but customers. For you, if you haven't already, looking at caps for some of your customers to get them to pay you a little bit earlier. Tools like Xero have built out in their invoicing feature, their new invoicing feature, the ability to check the credit limit and whether or not you're about to hit it. So using technology smartly to track and institute credit limits, I think is quite important these days. And then looking at payment incentives for your customers, just like suppliers. If you're needing cash and you say to a customer, you pick up the phone and say, if you pay me now or pay me in the next week, I'll give you a 5 or 10% discount. So they're needing to think around, who do they pay? Do they pay supplier A, who said, pay me now, I'm giving you nothing, or pay supplier B, i.e. you, who said, pay me now and I'll give you a discount? I'm going to pick the person who's giving me a discount every time. So it plays some psychology with your customers and see if you can get some more money in the bank. And then lastly, monitor the gap between your balances from a supplier and customer perspective, because that's going to be really important for your cash flow. So look at your balance sheet, look at your customer's balance sheet, and just check if those gaps are growing, because it's an indicator that things might be going the wrong way, and you need to kind of find another way of stopping that and getting cash flow in. So yeah, that's Stop the Squeeze. Hopefully it's given you a few things to think around. And the last is also, it's a fairly simple concept of cash is king. It's something that blows my mind every time I chat to my clients. I get the, Peter, I'm making profit, but I just don't see it in my bank. Why don't I have money in the bank? Every month I make a profit. And I think for them, they don't quite understand that profit doesn't necessarily translate into cash. If your customers aren't paying you on time and your suppliers are squeezing you for cash. So that's why I said, the previous slide, it's really important to monitor those and to communicate to your clients around that. It sounds basic, but a lot of clients really don't understand this concept of cash is very different to profit. So if they're going to look at the profits each month and think they're doing well, that's not good enough. They need to have a good grasp on the impact that profit has on cash and the impact that receivables, payables, and other things like taxes factor into their cash, and how best to manage that in a simple way. And I think using technology, once again, rather than a big spreadsheet that's clumsy, helps them to get to grips with that. And I mean, the one kind of example that we were talking about earlier about the banker not giving my clients enough money. This was literally that they were making a call whether or not to close the business down based on the fact that they didn't have money in the bank. But when you looked at their balance sheets, they had millions of rands worth of equipment, and they were in the canning space and the bottling space. So because of the alcohol industry kind of crashing down due to bans, they couldn't produce, they couldn't bottle anything. But as soon as they were able to, revenue just would start skyrocketing, but they didn't have the cash in the bank to purchase the bottles and the caps and all the things that they needed. Had a strong balance sheet, just couldn't operate. And without the bank giving them a little money, they were buggered. So I think looking at a business saying that it's solvent, saying it's got a strong balance sheet, doesn't necessarily translate into its ability to operate. It's all about liquidity right now, and so understanding that your customers are going to need cash quickly. You need to be able to tell them how to manage this better. And I think one of the aspects of that is understanding their working capital cycle and how long it takes for them to translate profit into cash. So I think sitting down with customers, planning this out, talking them around the the concepts in a really basic way will be a massive win for you. I know last year we did this when lockdown started, and our clients absolutely loved us. We actually got clients recommending other people to us, and we had one of our best years in the last year because we supported our clients in the right way and not just ticking boxes and doing the same thing we did. So being a little bit adaptable and kind of being a partner to your clients, I think, is really important right now. I think these kind of tools and these kind of topics are vital to that. Yeah, thanks, Dan. That's me for now.
Perfect. It's time for me to jump in here. Thanks for that, Peter. But yeah, I just want to echo that. We've had a few of our customers, obviously advisors and accountants, who then have chats with their clients. And we've seen both. We've seen it where, similar to your story, actually, Peter, they've wanted to kind of do a project and needed that loan to bridge, which you'll see shortly in Fathom how you can identify that, and then you can go to the likes of Bridgement to secure that. We've also had it the other way around, where there's been a big project and like the potential profit's been huge. Then they sat down and model it out, and they actually couldn't quite do it because of the huge cash outlay needed. And had the accountant not flagged that to the client, they would have proceeded and then had gotten a lot of trouble the next month or two after that. So that's kind of how I guess Fathom can help advisors with their clients this particular topic. But here, a couple of high level points about Fathom. I'm going to steal the screen share afterwards and show you something slightly more dynamic. But forecasting of Fathom, so we take your actuals from Xero, QuickBooks, Excel, pull it through. A bunch of different ways to model that forward, and then you can have a lot of different scenarios, which has been super helpful for the past kind of 12 16 months, because no one's really known what's going to happen. There could be a lot of things in terms of loans secured, or maybe you have to lay off some people, hire some new staff, whatever the case may be. So you can aggregate all these scenarios and really sit down with your client, and whether that's interactively online, as you see shortly, or whether that's like a PDF reporting pack as part of your monthly or quarterly package, you can sit down and say, well, scenario A, scenario B, scenario C, and this is the tangible impact that it has on your cash position. And because of that, your next projects with each of these scenarios are, A, B, and C as well. And kind of to Peter's point, in terms of the strategic plan with suppliers, this is where this, I think Fathom really comes into its own, because it's quite easy to kind of tick a box and say, yeah, here's a report, and then do nothing with it. But whenever you kind of expand that out and say your supplier terms are looking a lot, let's try and negotiate with them, or maybe cash is looking low, what can we do now to preempt the need for that squeeze later on? Or maybe you want to go to Bridgement and get that security for for a few months and get that bridging loan. So that's really where we come into play. But as the kind of bullet points here say, which you've all probably read already, I kind of model out different specific events, which we call micro forecasts, like a self-contained profit and loss of balance sheet movements. A good example of this would be getting a loan or hiring a new employee, because we visualize the cash flow. So rather than a non-accounting client seeing the an Excel and trying to find cell E11 or whatever the specific cell is to see how they're doing, it's kind of green or it's red, so it's very, very clear to them how they're doing it, and therefore they understand it a lot quicker, and you can get to that value add point that much faster. And then final point here, which is obviously directly relevant to the chat today, is when do you need finance options, rather than waking up one day and the client checking the bank balance and thinking, oh crap, I need to now hit the phones for the next hour to try and find something really, really quickly. You can tell them, well, in 2 months' time looks like there'll be a shortfall. Let's kind of kick off the discussions with Bridgement earlier than that, and then hopefully kind of get that in beforehand. So again, you kind of reduce their stress levels there. And I think the next slide says a couple more bullet points. So again, these are kind of pretty standard tech, to be honest, but it's quick to update. So again, it comes through automatically, dynamic, link it with reports, so you don't have to continually manually type in things in different areas of the product just to get that output. Can be based on your actuals, again, through the Xero or QuickBooks or Excel. Slots into the reporting packs. You can have it with your historical actuals and KPIs and all that jazz, as well as your text and your kind of action plan with the client. And again, you can model out when will you actually pay the loan back, and in the meantime, what other projects can you overlay on top of that makes the loan worthwhile, basically. So if I now fire up the let me just share my screen. Bear with me for 2 seconds. Cool. So please shout if you cannot see my screen. All good, hopefully. If not, just spam the chat. So this is the business roadmap. So again, I'm not going to go into masses of detail here. Just want to paint the scene a little bit. So as I mentioned, what you can do is you can have these different micro forecasts, so self-contained events that you basically layer on top. So you have your baseline, which might be based on actuals or budget or the same revenue every month or whatever you want to do, which is absolutely fine. And that's where the supplier terms come in. So you can say, right, it's going to be same month payment or maybe 60-day payment terms, etc. And that all aggregates up. But then what you can do is model out these events. So, Peter, you're mentioning 10 new hires, a bunch of IT equipment that goes along with it. You can model this out here to see exactly what impact that has on your financials. And at the bottom here, we have what we call quick metrics. And this keeps a metric front of mind. It's typically cash or profit based, because obviously those are typically most important. And you see everything that we change will update these. So with a client, you can clearly show them, well, if you hire that person, the impact on cash is going to be X, Y, or Z. So here, for instance, if we want to discuss maybe delaying the hire, it's as simple as pulling it back, and you see that all the metrics spin up here. And if I do the same again backwards, we can then see what changes. So the thresholds don't change, which is the color coding. So it kind of the details change a little bit in terms of some of the specific numbers, but taking a broader overview here, it doesn't have much of an impact at this moment in time. But then what you can do is get a little bit more detailed on this one as well. So for instance, let's say we want to add a loan. So you can add a loan directly into this scenario, or you can have very different scenarios and toggle back and forth. So for now, if I create a new scenario on the left here, and we'll just say loan secured, and we'll keep everything the same. So again, you can get into detail here with like percentages, increases and decreases or whatever, but if you keep everything constant, the only change is there's a loan that is inactive. We're going to make that active, and we'll pick a more relevant date as well. So I think we're in June, to July 21 here. And now we're creating a scenario, and you'll see in the top right-hand corner, that's now active. And you can clearly see the impact that the loan has on the cash on hand position here. So if we drag that back a couple months, it's got a pretty bad impact, and there's a huge shortfall in July. So just visualizing this really brings these discussions front of mind. And you can quite clearly see how you can get to the position where if a client wants to hire maybe 3 new employees, which will help the revenue and cash figures, perhaps 3-4 months down the line, they might need a loan now. You can model out the impact of that, and if it's worth getting the loan now or waiting and maybe staggering the hires, etc. And again, you can do all this in a kind of PDF, but if you want to stick with the interactive, I guess, version here, you can go to the top right-hand corner. You can toggle it on and off as well. So you can quite clearly see the change in the colors between the quick metrics at the bottom here by toggling between them. So it quite clearly makes sense to get the loan on this occasion. And you can have unlimited scenarios. You can have a kind of big loan, small loan, best case, worst case, etc. And just to show you quickly on the forecast, the actual cash timing profile, because Peter mentioned that in terms of the squeeze as well. So if you go up to the main forecast, probably what most people are expecting when you think forecast, you can go into these specific line items. You can see obviously the micro forecast laid on top here, but on the right hand side, you can change the value, as I mentioned, to a lot of different things that you can select to get exactly that output you want. But most importantly for this specific topic, you can change the cash timing profile, so add a new one or edit an existing one. and it can be kind of monthly, quarterly, annually, and when is that going to actually hit. And if you do want to see precisely what impact that will have on cash, you can go to options and preview to see all of the transactions that will go through, as well as in the balance sheet. If we go to the cash account, you can see all of the detail that goes behind it as well. So you can have a very good, thorough kind of look at cash. And again, this can be part of a report as well if you wanted to. But I guess the moral of the story here is it's a good indicator and almost like a fuel gauge for the clients. If they're going to embark on a road trip or similar, you want to know when you need to stop off, how far you can go before you have to stop off and fill up with some petrol. So this gives you that visibility as the advisor to sit down and help guide the client through it. And then there's a lot of different possibilities. So whether it's filling that deficit that Peter mentioned earlier through getting this loan and dropping it into the proceedings at July, or whether it's just actually more kind of almost forward-looking and optimistic than that, where we want to do all these projects. If we get the loan in earlier, we can then embark on it, and the kind of cash received by the projects will far outstrip the loan and any associated interest. So again, you can model out those different eventualities with your client through using Fathom forecasting. And I think that will be me for the very, very short product overview then. So let me just stop sharing. I'll go back to yourself, Dan.
It's my screen showing again.
Yeah, all good.
Great. So yeah, I mean, looking at what are the options in terms of accessing funding for SMEs, it ultimately comes down to three main groups of options. The first being traditional banks, and that's usually the default that an SME or an advisor might think of when a business is in need of some funding or an injection to their cash flow. The second are traditional, more old school non-bank lenders. These tend to be private individuals, private companies that do specialized and structured type finance, typically for larger transactions, and usually are unknown companies or unknown brands, not very well known. And it's, it tends to be individuals or companies that are looking to introduce a little finance product on the side. But much more difficult to actually find and acquire funding from those sorts of sources. And then lastly, you have a fintech funder like Bridgement that is a tech-first online credit provider offering new ways and new products in terms of business finance, SME finance, with very seamless paperwork-free applications and quick turnaround times, with usually easier requirements or minimum requirements to actually access that funding. In terms of Bridgement, we offer three different funding products at the moment, with a few in the pipeline. We have a normal sort of vanilla business loan. This is for a sort of a once-off need, and it's just a simple term loan to cover whatever that once-off expense may be. We also have a line of credit, which is more of a flexible revolving credit facility to cover ongoing needs. And then we have invoice finance to help clients unlock value that's tied up in their receivable invoices. So if clients are struggling with late paying debtors, late paying customers, then invoice finance is a great option for them to get an advance payment on those invoices that they're awaiting payment on from their clients. And what Bridgement does differently to a bank is we leverage financial data. So we use financial data to make the whole process a lot more seamless and a lot more simpler, and completely paperwork free. So we allow customers to connect at a click of a button to our Sage, Xero, or QuickBooks app. They can also connect bank feeds if they prefer that. And that just makes the whole process a lot simpler. We don't need any documentation. We don't need any paperwork. We also are able to provide more personalized funding that caters for the specific needs of a client that really understands their financial situation. The products that we offer are also much simpler and with more transparent pricing. So a customer always knows the total absolute cost that they're in for. There's a single fee. They don't have to read a 200-page PDF document that one might get from their bank to actually understand the complex fee structure. And so, by making it a lot simpler and easier for them to understand the total absolute cost of funding, they can plan better. And they can, slot that into a tool like Fathom to actually work out what the impact on their cash flows might be and what the cost is ultimately of taking funding on from us. Besides for the simpler and more transparent pricing, we also make early settlements a lot easier and more flexible. So we actually reward clients when they settle early by discounting all of the remaining fees, unlike some financial institutions that penalize you when trying to settle ahead of the term. And we also create new products. So the type of invoice finance, for example, that we offer is quite novel, and it's an interesting way of doing invoice finance that we've never seen before in South Africa. And it helps businesses with really small invoices of, in the low tens of thousands of rands to get advances on those unpaid invoices. Of course, also much larger invoices as well, but very useful for smaller businesses that typically are unable to get any sort of invoice financing from traditional institutions because their invoices are too small, or they don't have blue chip clients, or whatever it may be. And in terms of what this all looks like, so if you're on our line of credit product, you essentially have a dashboard where you can manage your facility, you get granted a credit limit, and at any point in time, you can withdraw the funds, you can select the amount and the term that you want, review the pricing, and the funds land in your account within 30 minutes during business hours. It really is as simple as that. There's no stack of paperwork or documentation that's required. And the entire facility is managed from this online dashboard that's available 24/7. And similarly for the invoice finance product, you get an online dashboard where you can view all of your receivable invoices that have been automatically imported from, if you've connected your accounting package, automatically imported from, say, Xero or QuickBooks or Sage. And you can view which invoices are available to receive funding on. And at the click of a button, you can request an advance on any of those invoices, one or many of them, and similarly receive and that advance, receive the funding within 30 minutes of requesting it. And over to.
Oh yeah, cool. Quick last one from myself. So I guess we touched upon a few things today in terms of the tech and the difficulties that Excel can bring, particularly in scaling and offering, or just manual input error. And I think everyone today's heard a few things. So in terms of using the likes of Xero or Dex to get the data in, and you get that automation, then you can use people like Fathom and Bridgement for our respective areas to really help deliver a greater client experience and highlight the issues before they become issues, essentially. And as it says on the screen, but it's the same for for the people I mentioned. But Fathom's cloud-based, so you can access it from anywhere. So you don't have to go to a specific desktop, or if the server goes down, it's not going to impact the ability that you have to serve your clients and really deliver that offering, and again secure them that loan through Bridgement if they need to. If you're kind of down for a week or two because the provider servers aren't working, you're in a little bit of a pickle when it comes to delivering that kind of exemplary client experience. And again, as I mentioned here, it's scalable, it's quick to set up, and you can visualize the impact of these decisions to the client, because a lot of clients won't have accountancy backgrounds. So it's great talking about quick ratios and current ratios and stuff, but they're not really going to grasp the significance of that in all cases. So you can visualize it and say, well, quite clearly here the cash goes down to X% or X amount of rand. Therefore, you can now not do X, Y, Z, get a loan in, and then move that forward in a scalable fashion. And that brings us to the end of the webinar. So thanks everyone for joining. If you do have any questions, please do send them in, or you've got the contact details for the three of us on the screen there as well. And yeah, kind of free trials and Bridgement partners and all that sort of stuff. So please do check it out if you are interested. And a huge thanks to Dan and Peter for sharing their wisdom today.